feel like tensions are bubbling, but what the hell? We're at all-time highs, and the market doesn't seem to care about just about anything. Let's move to the first slide. Dow, NASDAQ, and S&P are searching for their fourth consecutive positive week. They were down heading into this number today, and we'll see where they end up. Non-farm payrolls surge once again. Unemployment drops, and it seems as though soft landing is very, very possible. After holding rates high for so long, now we've cut 50 basis points. After today, for whatever different reason, honestly, I'm not even sure. It seems as though we're tracking a 25 basis point cut in November versus a 50 now.
Oh,
the biggest
thing,
thing,
122 in the bonds. I mean, at 122, they can only go 25.
Yeah, it seems so. The biggest thing, of course, in the past week has been all the tensions between Israel and Lebanon and OPEC Plus. Crude has been surging like crazy, over 8% over the past week, back to 1-month highs. The other interesting thing, we've seen the dollar rise big, right? I honestly
surprises you.
Yeah, explain it to me. How is it that we have this?
You almost reached puberty on that one.
I mean, dude, I just like. How does it work that we just had this really great jobs report, which I guess only means we're supposed to cut 25 versus 50, and we have the dollar rallying hard? Make it make sense.
What do you mean? I mean, it's not rallying because the dollar's not rallying because of anything other than the fact that it got killed for so long in anticipation of this. It's a buy the rumor, sell the news. So the dollar has been getting myrtleized. I mean, the euro's up huge, the yen was up huge, the British pound's up huge. They all made massive moves, and and it's just reversing a little bit. It's just taking some of the profits off the table. So the dollar all of a sudden rallied for a little bit after getting killed. That just seems like normal cyclicality to me.
I would expect you to say that. Well, okay. Why does it make sense that the gold is still running despite the fact that the dollar is running? Explain that one, tough guy.
Well, gold and the dollar have zero correlation, so I don't know why.
What are you talking about? They're completely opposite correlated.
Gold and the dollar have. If you should have watched yesterday's market measure, gold and the dollar have zero correlation. Victor Jones Jr. That's all I'm going to tell you.
Actually, there's no way I'm a Victor Jones Sr., if anything, okay? I'm older than him.
That's true. Right. That's true. But, I mean, that's the argument. He would use that argument against me.
Of course he would,
we did a market measure piece yesterday talking about S&P's. Tony, remember this? S&P's bonds, gold, euro, and there was one other. I can't remember. Oil. And the actual correlation between any one of those 5 assets, we did 6 assets totally, but the max correlation was 0.3 and the average correlation was 0.2. So that qualifies as zero. It's just, again, we can cherry pick.
Matter across time periods though, right? I mean, if you're talking like more recently, clearly a dollar and gold aren't correlated, but if you're talking about over other time periods, it can change.
That's fair. That's fair. If you're going back, a certain number of years, but looking at it in the relatively short term.
If you're going back to 1919, you'd be correct.
Going back in the relatively short term, I think the answer is that they're really not. The correlations right now are very random. You could obviously pick times out when they go tick for tick, but I would argue that gold is another one of those assets that needed a little bit of a pullback. Maybe it's going to get it here. We'll see.
I actually agree with that one. You know what? I should start a rumor that Victor's my son. We should start that rumor on air. People would lose their shit.
VIX, not bad.
This is going to change probably, but VIX was, as of yesterday, VIX was at 20.5 and VVIX was above 114. So there's some elevated volatilities, if you will, volatility measures with all this geopolitical and election angst going on. Let's move to the next slide. I'm gonna start that rumor. I'm gonna get at least 1 or 2 people in the chat over the next week or 2 to believe it. This is going back some time here, but if you can look on average as far as seasonality goes for the VIX, we're heading into some interesting times, of course, when you think about the election. We're about a month away. I mean, we're literally a month away from tomorrow for the election. We're about there, right? And you can see the VIX continues to ratchet up a little bit heading into the election and then eventually trails off. We'll see how meaningful this eventually is with regard to our current situation. Let's move to the next slide. We're talked about oil. This is the difference between, up top, you can see the difference between OVX, which is the oil VIX, and of course, regular equity VIX, VIX. And if you see down at the bottom there, the spread, that spread is as high as we've seen since Russia invaded Ukraine. Looking at the difference between OVIX, of course, is trading over, but this is the highest we've seen it since 2 years ago. 2 years and change, 2.5 at this point. So yeah, some serious tensions here in oil. We've seen oil rise big time. Obviously, we've seen, you can see OVX, but forget IVR, right? We all know this is probably one of the higher ones on the board right now in oil, over 100 and change, depending on the day when you look at it. Let's move to the next slide. And then notable cut in rates, notable drop in rate cuts this week, excuse me. 2024 is now looking like a coin flip between maybe 2 to 3 cuts, whereas 2025 is still looking at about 425 basis point rate cuts. So big change in rate cut odds this week. Really big change this week. And again, you've seen bonds fall off a little bit as a result of it.
Well, today you're getting your biggest move. Let's take a look and see. Yeah, I mean, I just bought some bonds right here at 122
even, I believe.
22 even and 120, 129. Same spot I bought them before BAT.
Yep.
And
you were able to sell them out at 10 or something like that, or 11, something like that.
Yeah, I really want to sell some bond
Puts.
Some puts here. Just looking to see which
strike.
Let's get I'm selling the 121s, which is the nearest out of the money strike. They're trading.
Right. It's now normal markets in there, right? Like 2 ticks usually get filled at mid price.
Yeah. I'm getting filled. You get filled 1 tick. Basically, at mid price, you can get filled.
Yep.
You're in November, I assume? Oh, November.
Yeah, 49 days. I'm selling the 121 puts. I just sold some for 156. So that's almost equivalent of 2 points. Break even is about 119. I kind of like that.
We can move to the last slide. So
unlike oil, bond options in November are to the present bond future. In oil, you're actually trading in November, you're trading the Z4 as opposed to the X4, which is the front month.
All right, good point, Tom.
Sorry, go ahead.
Mortgage rates are near 6%, and it started a refinancing wave. Apparently, volume was 3 times higher last week than it has been in the past year. NVIDIA continues to see high demand. A big move the other day, the AI Blackwell chips, and they expand a partnership with Accenture. AMD has an AI event next week, so if you notice a little pop in vol for the next week, that's the reason why. It's on Thursday, October 10th. Expected to be some updates on its AI personal computer push. We'll see if that's a sell the news situation. And then we got FOMC meeting minutes from the September meeting on Wednesday. You got a CPI number coming out on Thursday and PPI coming out on Friday. And then research this week, market measure how buying power affects option trading risk. Check that out.